The floodgates are opening. Those were the words from Ripple President Monica Long earlier this year. And honestly, when you think about it, it's really happening. The biggest banks in the world are starting to jump in. And this is a big deal. Banks are finally getting the green light, paving the way for mainstream adoption and eventually trillions of dollars moving on chain. It's an exciting time to be paying attention to all of this, so don't miss out on what's unfolding right in front of us. It's crazy to think about how much has changed since March. That's when David Sachs shared a big update about the FDIC stance on crypto. Basically, the FDIC has made it easier for banks to dive into crypto activities. This is a huge step toward making crypto more mainstream. Shout out to FDIC Gov and Acting Chairman Travis Hill for making this happen. If you dig into it, the FDIC clarified the process for banks to get involved in crypto, and the details are pretty exciting. Why does this matter? Because the FDIC plays a massive role in the banking world. It's the organization that insures most US bank accounts. Now they're giving major banks the go-ahead to explore crypto. This is a clear sign that the financial landscape is shifting, and it's coming from one of the biggest players in the game. On May 7, the OCC dropped some exciting news. They clarified that national banks can now buy and sell crypto assets at a customer's request. Plus, they can outsource custody and execution services to third parties as long as proper risk management is in place. Oh, and it gets better. There's even a video from the OCC explaining that banks they regulate can handle assets in custody and outsource crypto activities like custody and execution services. Pretty cool, right? Take a look.
More than 50 million Americans hold some form of cryptocurrency. This digitalization of financial services is not a trend. It is a transformation. Here at the Office of the Comptroller of the Currency, we've confirmed that national banks and federal savings associations may engage in certain cryptocurrency activities responsibly in order to serve their customers. OCC-regulated banks may provide custody services, including the safekeeping and secure storage of cryptocurrencies and other digital assets, all on behalf of their customers. The banks we supervise also may buy and sell cryptocurrencies they hold in custody at their customers' direction. Additionally, these banks may provide other custody services, including record keeping, tax, or reporting services for their customers. OCC banks may use a sub-custodian to provide the same services, subject to appropriate third-party risk management practices. While a range of cryptocurrency and digital asset activities may be performed by banks and their third parties, I want to be clear that the OCC expects these activities to be conducted in a safe and sound manner and in compliance with applicable law. To learn more, please visit occ.gov.
Getting into crypto or offering crypto services is about to get a whole lot easier. Big news dropped on June 14th. US banks can now officially offer crypto services. SEC Commissioner Hester Pierce confirmed it, and even Fed Chair Powell backed it up, saying banks are free to engage in crypto activities and support the crypto industry. This could be the start of Wall Street fully embracing crypto. The barriers are coming down, and it's exciting to see what's next. Curious about the details? Check it out.
In particular, you in the Fed and others at the Fed have spoken positively about the House and Senate work to regulate stablecoin in particular, a real opportunity to dollarize the globe and be a significant purchaser of U.S. Treasuries. Following that action by the Fed, have you seen an identifiable shift in banks or other regulated entities as it relates to engagement in the digital asset space?
You know, I wouldn't be the one to be picking that up first, but what I do see is a very significant change in the tone, and it really does reflect evolving thinking and the evolving status of the crypto industry. And I would expect over time we'll see more activity.
How is the Fed evaluating and overseeing banks or other regulated entities that are in the digital assets or crypto space?
So our view is that banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies, and banks are also free to conduct crypto activities as long as they do so in a way that is, protective of safety and soundness.
Thank you.
Great news. It's all systems go. We've now got the green light from the Fed, the OCC, and the FDIC. This is huge for XRP and Ripple, and here's why. Let's take a quick trip down memory lane back to 7 years ago. I know, time flies. At the time, Ripple had already lined up an impressive list of partnerships. In fact, Ripple's website used to showcase all these big name collaborations with major banks across the globe, including some right here in the US. Fast forward to today, and it's incredible to see how those early connections are lining up with the momentum we're seeing now, especially among institutional players. What's your take on Ripple and XRP? It feels like we're on the brink of mass adoption for this technology, doesn't it? It actually takes me back to January when Bank of America's CEO mentioned that the financial industry would dive into crypto payments if regulators gave the green light. Well, it looks like that's happening. Just look at JP Morgan moving further into crypto with their stablecoin-like token, JP. And it's not just them. State Street has plans to launch crypto custody by 2026, and Citi is also stepping up its game. Remember, they started leaning into crypto earlier this year in February. All right, before we dive into Citi, let's take a moment to revisit that clip from March. Remember when Monica Long mentioned that Bank of America's CEO said, "We're all in"? It really felt like the floodgates were about to open. Let's play that clip again. Check it out.
It feels like the floodgates are going to open this year, doesn't it? I mean, so within the past week, a couple weeks, so SOB 121 being called back or rolled back. And I mean, within, it felt like minutes, you hear from CEOs like Bank of America saying, we're all in. And, these are institutions that Bank of America was one of our early partners when we were doing kind of like the messaging software only payment solution. So we've worked with these types of banks for a long time, and the lack of clarity and I think in the more recent time, even hostility toward, hey, using these assets and this technology is not okay. It's dangerous, which is not the best way to handle it, as we would say. But looking forward, I would say, yes, it seems like there's going to be a sea change this year. And even I could say post-November, the US election result, even just the ongoing conversations we've had with banks around being reserve bank or transaction banking partners for the stablecoin or for our payments business, like the tone and message changed overnight. Like it was quick.
Everything really has changed. Now we're seeing the big players like the FDIC, OCC, and even the Fed giving the green light for crypto as long as everyone's following the rules. And let's not forget about the big banks like Citi and Bank of America. They've been around forever. And guess what? They're not exactly new to the crypto game either. JP Morgan and Citi are no strangers to crypto. In fact, back in 2024, Citi launched the Citi Integrated Digital Assets Platform, CIDA, to drive innovation and explore blockchain solutions. They really dove into the digital transformation we're all witnessing, breaking down key components and practical use cases. Some examples: Citi token services for cash and trade pilot, bond blocks, bond exchange, private fund tokenization, and proof of concept projects. It's like these big banks have been gearing up for this all along. They're ready to go. Just look at Citi digital assets. They've put together a whole breakdown of how they're diving into DLT and blockchain, yet somehow people still don't seem to notice. They're working on things like tokenizing private markets, proof of concept projects, token services for cash and trade, digital custody and settlement, digital issuance, trade pricing and execution, and even a regulated liability network. Down here, we've got all the details about what's going on. For example, the DTCC is connected with Wellington and Wisdom Tree. These big players, they're already in the game. And outside the US, things are really picking up speed. Take this, for instance. The Bank of Korea is backing phased stablecoin launches, and 8 banks are teaming up to create a digital won venture. This isn't a maybe it'll happen situation anymore or something to speculate about. It's happening right now. Things are moving fast, and we're seeing the biggest names in finance making the shift to on-chain. When you see a big player like JP Morgan launching a deposit token, it's a big deal. Now, it's not exactly a stable coin. It's similar, but technically it's a deposit token. The fact that JP Morgan is tokenizing deposits and stepping into crypto, even on public blockchains, is a moment to pay attention to. Why? because when JP Morgan makes a move, the other big banks are bound to follow. Think about it. Banks are in constant competition. If JP Morgan is diving into deposit tokens, you can bet that Bank of America is already taking notes. And we know Citi is in the game too. They've been working on deposit tokens for a while now. If you take a look at the Citi app and scroll down, you'll see something pretty incredible. Deposit tokens being explored and tokenized at their branches. It's wild because most people have no idea this is even happening. Think about it. How many people out there have accounts with big banks like JP Morgan Chase, Citi, or Bank of America? And it's not just them. Other major banks in the US are also diving into digital assets, blockchain, and DLT, distributed ledger technology. The thing is, most people don't realize what's going on behind the scenes. And here's the kicker. Blockchain and DLT, it's all back-end tech. It's powering a lot more than most of us think, and it's happening right now. Some of the biggest names in the game, like the infrastructure giants and institutional players, are making major moves. Take Fizzr, for example. They're now connecting thousands of banks to crypto through their new stablecoin platform, which was announced on June 24th. If you haven't heard of Fizzr yet, let me tell you, they are a huge deal. Just to put it into perspective, check out the stats from their website. Nearly 10,000 financial institution clients, 1.6 billion issuing accounts on file, and 6 million merchant locations worldwide. That's wild. They're easily one of the biggest infrastructure players on the institutional side of things, and now they're stepping into the stablecoin world. This isn't just speculation anymore about whether banks will adopt crypto. It's happening. We've known since 2018 that the big banks were getting on board, and now we're seeing it play out. We've seen the signs with Ripple. Big banks have already been testing the waters with private POCs involving Ripple and XRP, and now we're seeing the doors open for these major players to dive in and drive mainstream crypto adoption. This is an incredibly exciting time, especially for those who've been laying the groundwork for years, over a decade in some cases. Ripple is definitely one of those key players. And yes, I'm confident that XRP is poised for huge growth and adoption, value and volume as this all unfolds. This is super exciting, and it's definitely something we should all be paying attention to, especially with confirmation from the Fed. It's happening, folks. With that said, I hope you enjoyed this video. If you did, don't forget to hit that like button, subscribe, and turn on notifications so you don't miss out on more free content. Thanks so much for watching, and I'll see you next time. Take care.